Yo, I just got back boxing. Let me tell you something, man. If you have a bad day or something, fucked up day, there's nothing better than go boxing, get hit, give some hits. I mean, sweat, work up a sweat. It's fantastic. Well, any kind of martial art, I guess, but you gotta have contact. You gotta have contact. I used to do BJJ, Brazilian Jiu-Jitsu, but I like boxing. I mean, I think my frame, the way I'm built, because I'm long, I think it's just better for boxing. Anyway, I want to talk some more about the markets. What I tell you guys, man, this goes all the way back to the fourth quarter of last year when I said, I was saying Fed's going to cut rates. I was talking about that. I said that was going to be one of the developments in 2025, which was going to lead to a slowdown in the growth in fiscal flows. Now, I was wrong about the slowdown in the growth in fiscal flows because that's just been shooting up. And by the way, I checked for the tariffs today in the daily treasury statement, the customs taxes, nothing. Okay, nothing. So, I mean, I'm watching that every day. But I told you guys, 2025, be careful. I said, bullet points, I put them out there. I said rate cuts, and we're going to get more rate cuts. By the way, I wasn't, if you look at T-bill interest income transfers to the economy, that's down 20 billion. But interest on treasury securities, because you got debt that rolls over with a higher coupon. So overall, transfers are up about 25, 26 billion. But that interest on T-bills, that's the thing most affected, at least immediately, by the Fed rate cuts. Exactly as I said. Nobody's telling you this stuff. Nobody's telling you this stuff. So Powell, he's still got that hawkish. I don't know. I think he runs cover for these hedge fund guys like Paul Tudor Jones and Gundlach and what's his face, Drunkenheimer. I think Powell is one of them, so to speak. The good news about that is he's very predictable, okay? I'm sure you've heard the term the bond vigilantes, which is so ridiculous. I mean, in a structure where you have a central bank, which is a monopolist rate setter, there's no such thing as bond vigilantes. Bond vigilantes they exist only if the central bank doesn't understand its power, doesn't understand its position as a monopolist. Okay, it would be the analogy I've given in the past is imagine John D. Rockefeller, the founder of Standard Oil, right? Back in the late 19th century, early 20th century, where he dominated, he totally controlled the oil market, production, distribution, everything, right? Pricing. Imagine if John D. Rockefeller went around to all his little competitors and asked them, what price should I set my oil at? I mean, that's literal. Those little competitors would be the oil vigilantes in that case. It's absurd. He crushed them. He said, either you sell me your operations for shares, or I put you out of business. And that's exactly what he did. He put a lot of those guys out of business, and the ones that went in with him, they became very, very rich because his company was a monopoly until it was broken up, okay? So this is the thing with the Fed, which is, on the one hand, it's interesting. On the other hand, it's kind of silly that, here's Powell listening to the market. And I'm not saying he's unique as a Fed chairman to have done that, but I think he, more than anyone that I could remember in recent times, I'll tell you who was the exact opposite, was Volcker. Volcker did whatever the fuck he wanted to. He jacked rates up so high. He created inflation by setting prices higher, higher, higher. I mean, we see this. We see this in Turkey. We see this in Argentina we see this in Russia when they set rates higher and higher. What happens? The inflation goes up. Volcker did that. And it was only when the Fed started to lower lower the rates, that inflation started coming down. So Powell is easy to read because he's just going to do what the market says. Like he is, I think maybe, I don't know, I'm just speculating right here, but maybe he's hoping for, some nice cushy job at a hedge fund after his term is up. I mean, he's going against Trump. Trump wants him to cut rates. He's basically flipping off Trump like, I'm doing whatever the fuck I want and I'm not getting out of here, until my term is over. And it's interesting, like I think Trump is a little bit afraid of him. Trump keeps complaining about rates, but he doesn't do anything. I mean, if he really wanted to find a way to get rid of Powell, I'm sure he could. Some kind of malfeasance or something like that. There was insider trading going on at the Fed. I don't know. There must be some way, Trump. But so Powell is easy to read, okay? And he's just going to do what the market dictates. Now, the fact that he came out hawkish again today with the stock market crashing 2 days in a row, it makes me think like a lot of these hedge fund guys, they're still short the treasury market. And he's running cover for them. And this scenario, it hasn't been decided yet. In other words, what I'm saying is like this whole tariff thing, it might end up in inflation, but I'm skeptical about that view. Okay, I really am. I think that countries are going to want to maintain their volumes in terms of exports. I think many countries are going to maybe try to work out agreements with the United States. We saw Vietnam today. Trump was talking about that they would reduce their tariffs to zero if they can get some kind of a deal done with the United States. So, China raised it. But China doesn't want to lose that export volume. So be prepared. And China has a serious deflation problem. And there's been talk about the Chinese devaluing their currency, which effectively would eliminate the higher costs or the tariff. We got to see. Okay? But I take you back to what I told you at the end of last year. All of this is playing out right now. All of this is playing out right now. Okay? And nobody was telling you this. And I don't want to hear like, oh yeah, but everyone knew this was going to happen anyway. No. I gave you exact specifics of what the fundamental changes were going to be and why that was going to happen. And before anybody was doing it, and all the big shots were telling you boom times, inflation times, American exceptionalism, all this kind of stuff. Okay, I got quotes that I saved from all these big shots on Wall Street. All right, you don't get this anywhere else. Sometimes I laugh because I get people that come to me and like, in 3 days that they are subscribers, and it's not like clicking for them in 3 days that they're making tons of money. They're like, well, I guess I got to go learn MMT somewhere else. Like 3 days, 3 freaking days, okay? There's all kinds of quotes from very, very smart, wise people saying, shut up and listen, observe. It's great to ask questions, but give it time. You don't learn. I've been doing this, the MMT stuff, for 25 years, okay? There's things I learned recently, maybe not completely MMT, but you know, along those lines. Nobody, like I said, you can go to the MMT academics, people like Kelton, people like Mosler, people like Randy Ray, and you could read all about MMT theory and stuff like that. MMT, you know, all their works. You're not going to get somebody who combines that understanding with how markets operate. And then some. You're not going to get that. Where do you think you're going to go? Where do you think you're going to go? Tell me. Who? Tell me who's going to teach that stuff to you. Tell me. That's not happening, folks. That is not happening. Okay? So, like, everybody, just like, the thing that gets me is this lack of patience and lack of commitment. And, you know, like, that's so weak. I'm 68, okay? I mean, you know what I'm trying to say? Stick-to-itiveness, commitment, learn something, let it sink in. Immediately asking questions like, how come this is not going up? How come that's not going down? You said this and it's not doing this today. And you said that and it's not doing this tomorrow. I mean, freaking shut up and listen, okay? Let some shit sink in, okay? Absorb. I don't got patience for this stuff. Like, you said this and it didn't do this the next second. I've left that environment a long time ago. And let me tell you something. I got people, I've been doing this report now since 9 years. I still got people from the very beginning. Those are strong, freaking, solid, grounded, intelligent, not that the others aren't, but these ones that come in and like, in 3 days, you said it was doing this and it's not doing this. I better go learn MMT somewhere else. Dudes, people, you gotta freaking, I mean, the life is a long life. Give yourself some freaking time. You know, that you don't learn shit in 5 minutes, okay? I've been boxing, for a year and a half, maybe a little bit longer. I suck. This is a long journey, okay? And I'm cool with that. I'm fine with that. Sometimes I get, not sometimes, a lot of times I get beat up by these kids. Do I go, that's it, I'm going to learn boxing somewhere else? Everyone's going to teach you the same boxing techniques. It's a matter of application and discipline and diligence and repetition and doing it over and over and over again. And sometimes it's tedious, and sometimes you don't feel like doing it, and sometimes it feels boring or whatever. But you know what? That's what discipline. I've made many freaking videos about motivation being overrated, and it is. It's all about discipline, and it's all about commitment. Anyway, that's all I want to say for today. You're not going to get this stuff anywhere else. And I'm not trying to convince anybody to do anything that they don't want to do. But you're not going to get this stuff anywhere else. And if you think, I challenge any one of you to show me where this kind of information is happening somewhere else. Bring it on. Anyway, please like and subscribe and have a great evening. Maybe I'll see you over the weekend. Bye.